John Farrow was just quoting the oil price coming down to another low. How much, I know that it didn't make a huge difference to you guys at 45 or dollars a barrel, at 40, at 35. Now that we're so low, this must be a boost to sales.
I think at a certain point you do hit diminishing returns, and because I think the customers already factored in low fuel prices into their calculation. I think the hard thing for us, though, is if it starts to spike again, because volatility is the one thing that really causes our customers heartburn. Customers can get used to almost any ambient level of pricing, but when you have extreme volatility, that's where people start to get paralyzed and say, I don't know what to do.
On the other hand, the technology, the fuel efficiency of the new cars. I have an old Ford truck that gets like 13 miles a gallon. The new ones are getting 26, to 28 miles a gallon. Doesn't that lessen the blow if we have an increase? That's a big if.
Well, it does. I think, particularly in trucks where it's often a cost of doing business. It's, for passenger cars, it's a personal choice in many cases. But, if you have a work truck, it's just another cost. And so anytime that comes down, that's a good thing because it flows to people's bottom line. I think looking a little further ahead, the challenge is going to be with the rising fuel economy standards we have ahead of us, and with fuel prices so low, we run the risk perhaps of a disconnect between the customer's pocketbook interests and society's goals.
Do you think, by the way, after a record year in 2015 for U.S. auto sales, we can continue that momentum and hit a new record this year?
Well, look, one of my favorite games used to be when at the beginning of every year when auto CEOs would predict the next year's sales.
Yes, that's one of my favorite games.
Yeah, and everybody was always so far off. We can't predict next month, but one thing I can say is the underlying economy looks fine, and there's no reason why, with low interest rates, low fuel prices, that things can't continue on.
Are you concerned at higher interest rates? The Fed thinks it can get 3 or 4 hikes this.
Well, it'll be interesting because you hear a lot of conflicting verbiage around that, because now people are saying, well, maybe things aren't growing as quickly as we thought, so maybe we won't have 4, we might have 2 or 3. We'll see. I think, again, as long as they're not dramatic hikes and there's no indication that they will be, I think it'll be fine.
All right, let me switch the conversation now from current business to future mobility, because Ford's really taken the lead in these kind of innovations. You've got so many different experiments going on as far as ride sharing and other things. What are you most excited about there?
Well, what I'm most excited about is that we're really transforming our business from just being a traditional car and truck manufacturer to that plus being a mobility company, whatever form that takes. Because look, in 10 years, our business is going to look very different than it does today. We're having disruptions in the powertrain itself. We're having disruptions in the ownership model with either just access to vehicles or fractional ownership. And we're having disruption with autonomous driving coming. So, and there'll be lots of different revenue streams around this whole new world of mobility. And when all these experiments are trying to position us in terms of which revenue stream actually makes sense for us. Where do we have to participate? Where shouldn't we participate? And where do we have to partner? And we're going through all of that.
I noticed that Uber has a market cap the size of, or sometimes larger than, Ford.
Right.
And yet Uber only has an algorithm, right? And you guys make the cars. Can't you, at some point, take that business away from them?
Well, whether it's, I don't know if we could take that business away from them, but the whole space, the transportation as a service space is huge. It's into the trillions. And we, today, none of the traditional OEMs participate in virtually any part of that space. So if we do our work correctly, I think in 10 years, you'll see a very different business model from Ford. It should be less asset intensive, less cyclical, with lots of different types of revenue streams coming in. That's the challenge for us, but it's one that I love.
Let me ask you finally about the share price. Ford was such a success story coming through the financial crisis, which everyone else seemed to fail. and now you've won market share, you're hitting record sales, and yet the share price doesn't seem to really react. Why is that? What's holding it back?
Well, it's funny. I'm probably the worst person to ask about share price because I probably am too close to it. I think analysts are looking at it and they're saying just what you said. Record sales, low oil prices, how much better are things going to get? What we're trying to do is to smooth that out around the world and also get our margins up and then invest in this whole new world to really transform our company. And I think it's early days yet, and people haven't quite seen through all that.
You've had incredible growth in China. I mean, the numbers are double digit every month.
Yeah.
A huge double digit numbers every month. Does the recent volatility in the Chinese stock market, and I mean, some people would use the word crash, really concern you?
Well, I mean, it's never a good thing, but I would say this, the ambient growth, underlying growth in China is still, the growth that the rest of the world would love to have. And so, we're in it for the long haul. We're very well positioned, and we are growing. So, but there's no question that, China's hitting some bumps in the road, and we're seeing that. We, Ford, are not feeling it. I mean, we're doing just fine. But I think the world is looking at China perhaps a little differently today than it did, 6 months ago, primarily because of the stock market.
Are you concerned about the U.S. economy because of reverberations from that?
Well, there are a lot of cross currents. You've got currencies, that I worry a little bit about the underlying strength of the dollar being so strong. And but no, I think our economy is ticking along pretty nicely, and unless we have some exogenous shock, there's no reason why we can't continue.
All right, Bill, thanks very much.
Matt, thank you.
Pleasure to see you.
Yeah,
I'm going to go upstairs and check out the Ford GT. They have a beautiful white one up there, David, and another Raptor.
Sounds good.
As well.